Well, back here in Davos with me is our next guest. We're going to be talking about opportunities outside of the U.S. market, specifically in Russia. And with me now is Ronald Freeman. He's an advisor at Troika Dialog. You know, there's a fair amount of debate right now about how leveraged Russia is to the price of oil itself, how sustainable some of the opportunities are in that market. Should there still be an R in BRIC?
Russia is barely a BRIC country. It has a higher GDP per capita. It is far more advanced than some of the BRIC countries in terms of its engagement with the world economy because of its hydrocarbons. But yesterday, here in Davos, Finance Minister Kudrin and the head of Sberbank, the biggest bank in Russia, German Gref, both sang the market song. They want Russia to be a diversified economy. I also sit on the board of Severstal, a Russian steel company, and they have now become the fourth largest steel maker in the United States through a series of acquisitions of U.S. companies. The Russian government wants Russia to be engaged in the market economy. They're saying it, and they're backing it up with actions.
And that direction that you're talking about coming from the government itself is one of those things that causes some apprehension when it comes to global investors, when it comes to putting money to work in that market, because there is concern that the nation's interests may overrule their own interests. I mean, what do you say to investors when you hear that? Well,
when you hear Gref and Kudrin together praise Mr. Alek Perov, who's the head of one of Russia's private and best-regarded oil companies, Lukoil, you see they want to see the stock of Russian companies go up. They regard that as a mirror of the progress of Russia's economy. Indeed, those who had the courage to get into Russia last March saw their stock go up more than 100%.
You said Russia's barely a BRIC, saying it's above this emerging status that we keep using to describe it. But Russia's credit rating by Fitch and S&P is around like Tunisia and Bulgaria. I mean, what is it going to take? What do you think is holding back the current ratings?
What holds back Russia's rating is its focus on exactly one export, which you just said, Margaret, which is oil and gas. But Russia's per capita GDP is $11,000. China's is $3,000. Brazil, India, their GDP is much more like China's on a per capita basis than Russia. Russia's 140 million people. It's a much smaller country. Indeed, its demographics shrinking are one of Russian government's greatest problems.
You know, but Russia is one of those countries that people either are huge fans of investing in and sing the praises of, as you are here, or they have horror stories. They point to the Yukos of the world as the examples. I mean, there's documents circulating here at Davos about Russian roulette, current investment risk in Russia, and going through specific concerns there, particularly with Rusal, with Yukos. I mean, what are you hearing here at Davos?
I'm still hearing both, and indeed, I've been exponents of both those points of view in the 20 years I've been working in Russia. There's plenty of good and there's plenty of bad. It's been a very volatile environment, but the current approach of the government is clearly one that wants to see the market approve its policies.
Okay. All right. So you're still a bull. You mentioned Lukoil. You mentioned Severstal.
Right.
And you have positions in
I would also, yes, I do. I have to admit that. And I'm also a strong bull for Troika Dialog, the leading investment bank in Russia.
All right. Well, thank you.
Okay.
You got in that plug. Ron Freeman, advisor there at Troika Dialog.